Hey.
Hey, put a shirt on, please.
Hey, Dr. Goldsmith,
Yeah.
do you recommend taking advanced accounting right after the intermediate courses, or do you think we should do some of the other accounting classes before advanced?
Are you going to be here on the 5-year plan then?
I don't think so. Well, I'm not going to try to.
So are you a sophomore?
No, I'm a junior.
Well, then you'd need to take it next year to graduate.
I meant like next semester.
Oh, it's only in the fall.
Oh, it is? Oh,
Yeah.
that's good to know. All right.
Okay, it's time to get started. And we finished Unit 7. So we're doing pretty well in terms of lecture to keep on track for the end of the semester. We might even be able to finish these Zoom sessions a little earlier, and then you can concentrate on catching up on the homework. So I'm going to now share a screen to open up the PowerPoint. And so for Unit 8, we're going to take a look at preferred stock and dividends, treasury stock, derivatives, incentive pay and stock options, and then earnings per share, basic and diluted. And the first thing we're going to talk about is the difference between gambling and investing and between speculation and hedging. So stock options are one kind of derivative instrument, investments whose value depends on the value of some other asset. We're going to go into them in more depth later in this unit, but the accounting for investments and derivatives depends on the purpose for purchasing them. And you ran into this concept in government accounting if you're taking that class. The two purposes are speculation, which is essentially gambling on future prices of a commodity or a stock, or hedging, which is buying the derivative to reduce a company's exposure to risk. So it's appropriate at this time then to review biblical concepts about gambling and investing. Gambling is not specifically condemned in the Bible. However, the attitude that would tempt someone to gamble is condemned. So let's take a look at the verses that I've listed here. Starting with Proverbs 13:11. And English Standard, wealth gained hastily will dwindle, but whoever gathers little by little will increase it. New Living Translation, wealth from get-rich-quick schemes quickly disappears. Wealth from hard work grows over time. Proverbs 28:22. A stingy man hastens after wealth and does not know poverty will come upon him. Greedy people try to get rich quick, but don't realize they're headed for poverty. Ecclesiastes 5:10. He who loves money will not be satisfied with money, nor he who loves wealth with his income. This also is vanity. Those who love money will never have enough. How meaningless to think that wealth brings true happiness. First Timothy 6. Six through 10. But godliness with contentment is great gain, for if we brought nothing into the world, and we cannot take anything out of the world. But if we have food and clothing, with these we will be content. But those who desire to be rich fall into temptation, into a snare, into many senseless and harmful desires that plunge people into ruin and destruction. For the love of money is a root of all kinds of evils. It is through this craving that some have wandered away from the faith and pierced themselves with many pangs. Okay. Something I read in an article about the casinos in Mississippi is that there is a second business that opens up in the neighborhood of casinos every time a new one opens, and that is pawn shops. So why do you think that having a casino in your city would suddenly create more pawn shops?
So people can go pawn their items for cash to gamble?
Or because they lost all their cash gambling, they have to pawn things off to live on. You're right. So gambling is not a prudent investment strategy. As you learn in the finance class, when you have money to invest, you're supposed to try to minimize your risk, not maximize it. And gambling violates the biblical principle of being a good steward of the resources God gives one. Now, some people could say that I'm only going to do it with a small amount of money and it's just for fun. I'm not going to argue with that. But for me, gambling is like walking up to a vending machine that says out of order and putting my money in it anyway? What's the point? You might get lucky and get the candy bar, but probably the money's just going to tinkle down into the bin and you'll never see it again. Okay, so let's go back to the share screen. Gambling violates the biblical principle of being a good steward of the resources God gives one. Many people confuse investing with gambling, but they are not the same. Timothy Terrell wrote an article explaining the difference. Gambling and stock market investing both involve risk-taking, but this does not equate the two. That means it doesn't make them moral equivalents of each other. Taking risk is inherent to diligent and productive work. He quoted Proverbs 22:13 and Ecclesiastes 11:4. Gambling is consumption. It is done for the entertainment value of taking a risk. Stock market investing contributes to production. It is the taking on of risk as part of providing a valuable service. In other words, when you invest money in the stock market, it enables corporations to undergo their activities and produce wealth for people. Because gambling is consumption, a gambler can expect to lose money on average. You've probably heard the saying, the house always wins, meaning that the gambling casino is going to make a profit on the transactions, not the customers. An investor in the stock market can expect a considerable return on average. Now, some years it could be a loss. Some years it could be a huge gain. But for decades, if you look at the long-term average return of stock market investments, if it's a diversified portfolio, it averages about a 10% return. The Bible encourages avoidance of risk, not reveling in it. This relates to accounting for derivative securities, which will be discussed later in this unit. Hedging by investing in derivative securities as a strategy intended to reduce a firm's exposure to risk can be a legitimate investment strategy. Speculation, however, is not a biblically legitimate strategy since it is essentially gambling. Now, if you are a shareholder and you invest money in a corporation, do you want the corporate directors to gamble with it, or do you want them to invest it? Pretty sure most of you would want it invested. Okay, terminology for shareholders' equity, comparing IFRS and USA GAAP. Capital stock is referred to by IFRS as share capital. Well, it's a share of stock, it's capital. Common stock in IFRS is called ordinary shares. Preferred stock is called preference shares. Paid-in capital, excess of par on common stock is called share premium. Ordinary shares. Paid-in capital, excess of par preferred is called share premium. Preference shares. The account called accumulated other comprehensive income in USA GAAP is called reserves in IFRS. And the components of it, net gains and losses on investments. IFRS calls that investment revaluation reserve. Gains and losses on foreign currency translation is a translation reserve. And revaluation reserve, that is restoring losses that were written down. That's banned completely by USA GAAP. Retained earnings is the same in both. total equity under IFRS, total shareholders equity, USA GAAP. One thing I want to mention is that years ago, the word reserve was prohibited in USA GAAP because it implied that they were saving back some money. Maybe it didn't imply that, but that's the way that some investors understood it, that they somehow were saving up for some money using some kind of peculiar account. And I don't think that that's going to communicate the information correctly to investors. All right. And this is what I was just saying. FASB considers that the term reserves used by IFRS instead of accumulated other comprehensive income is misleading because it suggests to some investors that a company has some kind of savings or rainy day fund. USA GAAP used to use the term reserves for the allowance for uncollectible accounts and for accumulated depreciation, but it's no longer permitted. The revaluation reserve in IFRS results from the IFRS practice of revaluing property, plant, and equipment to their fair market value, but this revaluation is not permitted in USA GAAP. In other words, in USA GAAP, if you have a fixed asset and you're depreciating it, but its market value is higher than the book value, you could increase it with this revaluation reserve by debiting the asset and crediting this reserve. But USA GAAP thinks that's not conservative and it's not permitted. Questions or comments before we go on? Okay, then let's take a look at the types of corporations. Our main concern here is for-profit business corporations, but other organizations are registered with the government as not-for-profit corporations. Examples include churches and other religious organizations, colleges and universities, charities and foundations, hospitals. So if they're not registered as a corporation with their state government, they can't open a bank account, they can't legally own property. And they would need to be incorporated that way in order to then be able to apply with the IRS for tax exemption. Advantages and disadvantages of incorporating. Advantages are limited liability. Was this discussed in accounting principles too? Limited liability? Or in business?
Yes. Yes.
Okay. So it means if it's in a corporation, if you are a shareholder, what is your liability limited to?
It's limited to stuff like in terms of people suing you.
Okay. So what it actually means then is that they can sue the corporation, but they can't sue the shareholder, right? So if you had a car that you bought from Ford and it exploded, you could sue Ford, but you couldn't sue a Ford shareholder.
Right.
Also, limited liability, the consequence of that is that the corporation might be sued and lose every single penny they've got. But the most a shareholder could lose would be the value of their shares. So their losses are limited to how much they've invested. While in a partnership or sole proprietorship, if you owned one of those, you could actually have your personal wealth seized as part of the lawsuit in addition to the company. So that's a huge advantage. And under business law 2, also I should say, some partnerships are organized to have limited liability. Greater ease in raising capital. If you're a sole proprietorship, you have to come up with all the money for expansion all by yourself. If it's a corporation, you can sell shares to thousands and hundreds of thousands of different people to raise the capital to expand. Disadvantages: increased regulation and reporting requirements, lots of red tape, double taxation, because when the corporation earns the money, they have to pay income tax on it. And then when that profit that's left over after the tax is remitted to a shareholder, then the shareholder has to pay income tax on the dividend. So the same flow of income gets taxed 2 times. If it's a partnership or sole proprietorship, they're just taxed at individual taxpayer rates without the company being separately taxed. So here's an example of a 1937 share of stock. They got certificates printed on paper in those days. Nowadays, it's all electronic, but that gives you an idea of what they looked like. Common shareholder has the right to vote. You get 1 vote for each share that you own. You have the right to share in profits by means of dividends, but dividends are not mandatory. But if the profits are going to be distributed to owners, then all the shareholders have the right to participate in them. If the company liquidates, then the common shareholders have the right to share in the distribution of whatever assets are left over after the liabilities are paid off. Preemptive right. That's the right of first dibs on the issuance of new shares in order to permit shareholders to maintain their percentage share of ownership. So if the company is going to issue new shares of stock, they have to first offer them to the existing common shareholders. And then if they don't want to purchase them, they offer it to the public. Introduction to stock transactions. Stop the share for a minute, see if there's any questions. Okay, we're going to be